Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you are definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about gold. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect for this market, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that the market is in a very strong uptrend. That has been pushing to the upside, creating new monthly higher highs and higher lows. And all this push to the upside is coming after the break, retest, and rejection to the upside of this quite important historical structured zone. This level was acting as previous resistance for many years, which after the market broke it to the upside with this impulse became support, because as we know in the market, a previous level of resistance, especially a resistance level that has been respected in multiple occasions in the past for many years, after it is broken to the upside, all that previous resistance becomes support. And what you expect is the retest and the rejection to the upside. And in fact, that is exactly what happened here. The market broke, retested, and started the uptrend with a huge push to the upside. And all this uptrend here that we can easily notice, all of this is fueled by very strong institutional buying. And we will be speaking about that institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that here on the monthly, everything is quite bullish and drop down on the weekly time frame. Now, from a weekly perspective, we can notice two things. First of all, we had this massive push to the upside. This was the breakout from an ascending triangle formation. What we had here was a market which was creating equal highs and higher lows at the same time. Now, when you have a market creating equal highs at a specific resistance zone, but at the same time, it is also creating higher lows, that is in ascending triangle formation. And this usually indicates that buyers are still in control of this market, because if they're creating higher lows, buyers are in control, even though resistance are protecting this level, which means there is only a matter of time before the market breaks out to the upside. And usually the breakouts in this kind of pattern are quite aggressive. And in fact, that is exactly what we got, a massive breakout to the upside, showing a quite explosive price action behavior. I'm sure you have seen this pattern already many times play out in the market. Now, what we can see here is that we just had a new impulse to the upside followed by a correction. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. This gives us a correction range in between the 0.32 and 50% retracements. So a quite strong support and demand zone. The market retraced to the area, and right now it is starting to push back to the upside. Now, that is exactly what you expect in a strong uptrend. In a strong uptrend, you expect an impulse, correction to the 0.32, and the start of the continuation to the upside, which so far is exactly how the market has been behaving. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I spoke about gold just a few days ago when the market was around this area. I explained all the reasons for which I was expecting this rejection to the upside. And then again, after this impulse higher, I explained all the reasons for which I was expecting a correction back into this zone. And then from here, a rejection higher, which right now seems exactly what the market is doing. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. But at the moment, what do we have? Now, first of all, the reason for which I was expecting a correction to this zone is because this is a quite important structure level. This area, in fact, was acting as the previous support preceding this rejection to the upside. The market then broke below that zone, so that previous support became resistance here. Now the market broke back above the level, so again this previous resistance is now acting as support. Therefore, there is good probability of seeing some potential bullish price action being created away from this area. We can also notice that actually this zone is a confluence of support and demand zone, because after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. This shows how we have a 50% and 0.618 Fibonacci retracements lining up exactly inside of this zone, therefore creating a confluence of support and demand. And inside of a confluence of support and demand area, there is an increased probability of seeing institutional buying. So if institutions will be buying, what we could see at that point is a potential push higher. Now, what we have to start picturing is that even though right now it seems like we don't really have anything interesting, what was interesting was on the test of this level, this start of a rejection higher. But now that the rejection has started, what would make this rejection interesting is if we get a push higher, that would create a W formation, because we will have a push lower, correction, tried going lower, and then at that point we will get a push higher. Now, after the creation of a W formation, that is a bearish pattern. Most of the times after a W, you get a push lower, completing the W formation at the neckline. We can see, for example, a W formation right here. We had the push lower, correction continuing lower, went higher. What happened after that? We get the push lower and completion of the pattern at the neckline. I'm sure you have seen something like this play out in the market over and over again. So if from here we actually will get this push higher, this is where things get really interesting, because after the push to the upside, we could start seeing some short-term bearish price action for a correction back lower and completion at the neckline, especially because institutions seem to be moving back to the bearish side for gold. In fact, if we move to the commitment of traders analysis, what can we see? Now, first of all, we are missing the very last few reports. We should see them right now. This week should start to come out, because of course the US government just had the longest shutdown in the history of the United States government. So obviously we didn't get the very last few reports because the US government was effectively in a shutdown. The last report we have was from around mid-October, so we don't have the very last reports. However, it is important to keep in mind that institutions take a lot of time to change their positioning because they have such large orders, and in the market, for every buyer there needs to be a seller, and for every seller there needs to be a buyer. So if there isn't enough liquidity in a specific moment in the market to fill the entire order, institutions take months sometimes to shift their positioning, slowly building up their positions. So if we start to see what institutions were doing, we can reasonably think that they continued that action. In this case, that action was a decrease of the net positions. Therefore, they were starting to move back to the bearish side for gold. In fact, with the very last report, they had added 2,900 shorts on gold and closed 18,000 longs. So net positions were slowly starting to get decreased again, going from 266k net positions down to 252k net positions, again down to 231k net positions. So already you can see that it is a slow process in which institutions are shifting their positioning, in this case back to the bearish side for gold, therefore making it weaker. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if we do get a push higher, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection lower, completing this W formation at the neckline that definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.